You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster Giovinazzi from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means I am back here in the northern studio. Escaped the southern studio somehow. Not sure how. I slipped through the icy grasp of good old Mother Nature there that is shutting down pretty much the entirety of the Southeast from a flying perspective right now. I know thousands upon thousands of flights have been canceled. And yet somehow we were managed to slip through the net. I've never seen the Orlando airport really as quiet as it was yesterday. I thought for sure it would be a madhouse, people fighting to get on flights, and, like the last plane out of Saigon, everyone's trying to hop on to whatever seats are available. And no, it was pretty much a ghost town. I guess people just didn't show up because they thought their flights are going to be canceled, or whatever the case may be. There was nobody to be found. Our flight even, weirdly enough, about a third empty. You'd think on a day when everyone is out there fighting for flights, fighting for seats, that there would be just no room at the inn, no seats on the plane. But yeah, there were a ton of seats. So apparently you needed to be at the Orlando airport yesterday around 4 p.m. That was the time to get on the flights. Because if you believe the news, you believe Southwest and everything else like that, it is just a nightmare. Only about a third of flights are making it out. Apparently we got in the lucky third. I don't know, because managed to make it back for showtime today. I thought for a second there we might have to cancel or postpone the shows for the rest of the year, but no. I am back. My name, of course, Mark Longo, listeners from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network, upon which so many of you are binging and mainlining these days, listeners. We really do thank all of you who, have contributed to driving up our bandwidth bills this year. They are at records because, hey, the network is at a new record pretty much every month. So it's a good problem to have. We thank all of you out there who have contributed to that. Of course, if you do like what you hear, all we ask is that you go above and beyond and you maybe leave a little bit of review wherever you get the show. Could be Apple Podcasts, could be Spotify, could be where you get our mobile app. So it could be the Google Play Store, could be the iOS Store, even the Kindle Fire App Store. If you have a platform that allows you to leave a rating, it does help new folks continue to discover the show. And there are still many folks out there, even though I've been running for coming up on 16 years. Many folks need to discover it. So head on out there if you like what you hear and keep the partay rolling. And speaking of partays, they don't get much more fun. They don't get much more active, at least in the options world, than what we got cooking over there in the old secret club. You know where to go to find all that. theoptionsinsider.com/appropriately enough secret club. For all you cool kids out there, maybe you need a little bit of break from your family. You want to join some fun exclusive pro content. Man, there's about 200 episodes on that exclusive pro feed already for you folks to mainline, including great pro Q&A sessions with some of the best, and I mean it, the best minds in the world of options and derivatives. We have assembled them all like Avengers Assemble for you folks to pick their brains. And then, of course, great Options Oddity show where we break down the week that was from a weird, wild, and just completely woolly options activity perspective out there. You know, to go to join all that fun, theoptionsinsider.com/pro. And I said I at the top of the show because it is a solo venture today. Uncle Mike is delayed. I think inclement weather has him tied up. He might be able to join us if I can delay for a little bit out there, maybe around 12:30, so maybe halfway or so roughly through the show. And then I don't know what's going on with the greasiest of meatballs and the rockingest of lobsters. I think they have been knocked silly by the weather out there. But you know what's never knocked silly? It's the trading block. So let's get to it.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block, the portion of the show where we tell you what the heck is trading out there. And of course, it's another interesting one to wrap up at least the year for us. Obviously, on this show, more shows to come tomorrow, including vol views and indeed options oddities for all you pro folks out there. So one more day to yet be in the can for the markets and for the network. But for the purposes of the option block, markets closing off the year, at least for today, green. S&P looking pretty firmly in the green, up 1.8%. The Dow up about 1.1%. NASDAQ up 2.5%. We've got some jobless claims data coming out this morning that folks think maybe might paint a rosier picture for the Fed, maybe cause the Fed to ease up. You know, it's all about the Fed. I have said it before. I will say it again. This is the most Fed-driven market I have ever seen in my decades-long engagement with the world of options, listeners. I've never seen a time where literally every piece of news is digested in the form of, how does this translate back to the Fed? What does this mean for the Fed's decision? What does this mean for the Fed's outlook on rates? This, that, and the other. Fed. It's really unprecedented. And so, yet again, we are seeing perhaps this will cause the Fed to ease things up, and so we are rallying. It does seem like the market at its core, a lot of you folks out there want it to rally, even though the bears have taken hold. Obviously not the best year as a whole for the old major indices. Intriguing stuff out there, but indeed still about 20% to the dark side for the S&P, about 19.75% right now out there. So obviously a rough year if you're a buy and holder. If you're in the Uncle Mike camp, of course, he does like to do stuff. He does like to sell garbage puts and buy put spreads and all sorts of fun things, right? Calls to mitigate the losses on a year like this. Of course, we all know his favorite holding, and he's not here, so he can't dispute it. His favorite holding of all time, a little bit of the old BTC. Don't tell him I said that, though. So a lot of red on the screen. Hopefully you've been listening to our network this year, and it's helped perhaps ease the pain, giving you some ideas, some strategies, some techniques, some education to help arm you for markets like that. All of that a long way around to saying, as we kick off the show, VIX, markets are greens. That means VIX is going to be in the red at about a 21.5 when we commenced operations here. That's down a little over 2, about 2.1 points from our last show. Remember, that was last week. That was last Thursday. No show, obviously, on Monday here, celebrating the Christmas holiday. By the way, I hope all of you out there had a great holiday season, whatever the heck it is, Festivus, whatever the heck it is you celebrate. Hope you are, and indeed still are having fun out there. Maybe lighten up on the eggnog a little bit so you can enjoy the show. But other than that, hope you're having a fun time. Hope you're rolling around in tons of fun presents, got friends and family everywhere, and having a great time out there. So VIX down 2.1 points from our show on Thursday. Even though net on the year, VIX is up. VIX is up almost 5 points, 4.9 points from where it kicked off. In fact, it kicked off the year on its low for the year. The low for the year came on January 3rd of 1634 out there. So just crazy town any way you want to slice it, listeners. Can you guess? Can you guess what the high for the year was for VIX and when it came? Give you a hint, it wasn't in January. No, it came a few months later, right? A couple of weeks after the big invasion over there in Ukraine. Markets were obviously spooked and rattled, and we got up to an intraday high on March 7th of nearly 39, 38.94. Looks like we ended up closing that day right around 36.5. So a lot of living was done on that day. But yes, we kicked off the year at the lows for vol for the year and pretty much have never looked back the entire year. So it's been an intriguing year. A range of 16.34 to the dark side and 38.94 to the upside. That's a lot of living packed into VIX over the span of a year. And our old friend Vol of Vol, where is it hanging out right now? It's at a 77. It's down 9 points from where it was just on Thursday's show. And it's pretty much hanging out at its 52-week low. The 52-week low is 76.13, so we're within spitting distance of that. So for all intents and purposes, VVIX also hanging out pretty much at its 52-week low on the year. If you're wondering how has VVIX evolved over the course of the year, well, it's given up a lot of vol. It kicked off the year, even though VIX itself was low. Vol kicked off the year. It's down 31.5 points on the year, listeners. So we were over 100 to kick off the year. So we were still very, very fluid from a vol perspective. Remember, it wasn't until many months later, I believe it was the April timeframe, where vol really broke 100 and managed to stay below it again. We opened the year 109.31 from a vol perspective. We topped out. Take a guess when we topped out for vol, listeners. No, it wasn't the February invasion or a couple weeks later like it was for VIX in March. And nope, it was 173, and it came on January 24th. So intriguing stuff to be had. Let's go out to VXX. This was a bit of a troubled year, I think, to put it mildly, for our friend out there, VXX. A lot of us, myself included, really kind of washed our hands of it in the middle of the year. We saw all this drama with Barclays, just couldn't seem to wrap their heads around what the hell to do with this thing. So they kind of washed their hands of it. So a lot of us washed our hands of it as a result. They're now back in the game, but VXX still hasn't really recovered. It's at a 14 even right now, down 1.1 points from where it was this time last week. It hit its 52-week low also today. We're hanging out pretty much at 52-week low territory. Let's see, what was the exact 52-week low print out there, listeners? It was 13.91, so not even a tenth of a point below where we are trading right now. That puts it down 4 points net on the year. It started the year almost 18, 17.90. Now, this was what was strange to me. Our data shows a 52-week high is 41.65. However, I don't see none of my charts show it printing that high. So unless we got a very wild intraday spike back in mid-March, around March 14th, I show the high for the year is somewhere around 28.70. But it does show a 52-week high of 41.65. So VXX had a weird year. It got kind of dislocated in the middle of the year. So I'm going to guess maybe that print came in that strange time when no one was really paying attention to it and things were not quite right with VXX. I'm going to say a real world top there of around almost 29, but even though the technical high is 41.65. Let's get out to everyone's favorite friend, UVXY, to see when will Santa bring the gift of the reverse split? Not today, listeners. UVXY, when we kicked off the show, 675. Let's go. Here we go. Oh, looks like we're getting a knock on the door from Santa Uncle Mike. Santa Uncle Mike, are you there?
I am here.
Oh, there he is.
Oh!
The one, the only Santa Uncle Mike, joining us fashionably late as always. Uncle Mike TOSAW, of course, from St. Charles Wealth Management. Uncle Mike, welcome back to the show one final time for the year that is 2022, sir. How are things in St. Charles?
All is well. All is well. Happy to be here for the last time of the year and excited about 2023.
How did the mad, once-in-a-generation snowstorm treat you guys up here? Did you guys get buried?
You know, it's funny. I think I saw something on social media, the Great Blizzard of 2022, and it showed a measuring tape on top of snow that didn't even go up like a centimeter or something.
So it's one of those where they really beat the drum about it once in a generation, and not much materialized for you, at least, sir?
Almost nothing. I mean, it was maybe an inch or two at most, and it was really cold. Don't get me wrong; we had -10. I took the family to the Bears game last Saturday. Bills won, by the way, so I'm still undefeated. I've never seen the Bills lose at Soldier Field, by the way.
You were one of the people who were there, like 11 below 0. You were one of the. I saw the tickets were going for like $4.
I wish that's what we would have paid a while in advance when we bought them.
Oh, that's a shame. Yeah, I saw the pictures. It looked kind of light. If we were here, I would have debated going, but I mean, yeah, you got to really want it. Did you sit in the club area, hopefully?
No, it was fine. I mean, if you dress warm, you're fine. I mean, we layered up. Spent a lot of time in duck blinds in my day, and have a lot of good hunting gear. It was good.
There you go. I knew you were a diehard Bears fan, so there we go. You're the one who's going to pay the money and go sit in 11 below on the lakefront in December. You got to be a hardcore listeners to watch my boy Josh Allen, my quarterback in fantasy. I was torn this week. I obviously want the Bears to win, but I have Josh Allen. I need him to score points for me. I did see a lot of Bills fans down in the Orlando area this past week. They were talking a lot of smack. They were enjoying the run that their team is on, even though Joshy did get picked twice. But I digress. That cost me some points. I ended up winning the game, you'll be happy to know, though. Mr. Uncle Mike.
I was worried.
I know you were worried. I know you were sending me text messages. How you doing? How are you winning with your boy Joshy? So it worked out for me. All right, Mr. Uncle Mike. It is you and I on the show today, holding court here on the final option block for 2022. So let's start there. What is catching your eye out there in a very much Uncle Mike type of day? And then we'll get to a little bit of reminiscing about some things that resonate with you on this mad year, sir.
Well, I think today the market's up. So we have it set to where I don't have to turn my screen upside down today, which is kind of nice. But markets are higher today. This could be the Santa Claus rally that they're talking about for the year. But with the bearishness going into it, the Grinch got to Santa a little bit before he needed to be. So I think we're just having one of those days to where it's a traditional low-volume day. Some people are by their computers and they're buying some stuff. So that's kind of what I'm seeing today. There's really not a ton of news. I mean, it looks like Russia's trying to do more bad things to the Ukraine, but that's really nothing eventful or nothing shocking that we didn't already know. And it's just a good old boring low-volume day.
That it is. Are you saying people are not glued to their screens and during a holiday week they have other things to do, sir? How dare you? Like maybe buy some Bitcoin?
Yeah, you know what? All the kids the other day, they were saying, Mommy, Daddy, can you get us some Bitcoin?
I did make a joke while you weren't here earlier, Uncle Mike, maybe alluding to the fact that maybe you love yourself some Bitcoin. So you might have to listen to the earlier segment of the show to see how I besmirched you completely unfairly.
It's nothing new. Besmirching is your middle name.
Besmirching? I do like a good besmirch every now and then. All right, Mr. Uncle Mike,
yes, you do.
This is our final show of the year, so we have a lot to process here on the show. I was just running down some numbers as you were joining us for how things fare on the year, but I'm curious for your perspective. It's been, I think, to put it charitably, not exactly an Uncle Mike type of year. S&P coming into today down somewhere around 20% on the year. Obviously not at the lows for the year, but also certainly well off the highs for the year. So what really stands out to you? We had a very much unprecedented year, not just S&P selling off, but bonds having their worst year in decades, maybe ever. We have crypto just getting wiped off the map in a lot of different regards out there. We have just about every asset class. And if you want to hear about the cross-asset correlation, stay tuned a little bit later for TWIFO listeners. We will get into that. It's always a fun time of year on that show. But Uncle Mike, what really resonates for you? What were some of the trends, the trades, the developments that really stick out for you in this completely upside-down year?
Well, it's ironic that we thought 2020 was an upside-down kind of year, but 2020 was more normal than 2022.
We were just getting started in 2020. We didn't know. We were just babes in the woods.
Pretty much. I would say, so in the nearly 20 years that I've been following markets and been in this business in one way, shape, or form, this was it wasn't the worst year or like the bloodshed awful year, but this was no doubt the most unique year when looking at the averages. Can you recall a year to where stocks and bonds both went down like they did in the same year? That's very atypical. Now, of course, the reason for that is that when you have the sudden the interest rates going up like they did, the Fed doing what they did, it's going to happen, but it's just been very unique. One thing that I always tell people whenever I'm explaining option Greeks and how they would work with interest rates, I always say, okay, in a vacuum, if the Fed did this, of course, we're not in a vacuum, which this year proves it. Typically, if interest rates go higher, in theory, bonds would go lower, but going up at this fast of a pace, it proves that we're definitely not in a vacuum. When you're looking at it, why would you want to invest in bonds when they're going down like they are? Why would you want to invest in stocks when they're going down like they are? So on this, you have this conundrum to where does the money go? And some people in the early parts of the year would say, well, of course it needs to go to Bitcoin. Money's dead. Everything, the world as we know it is totally changed. Buy some Bitcoin. And, just ask Kevin O'Leary. That's not always a good idea. Now, he loves crypto still, or the concept of it, but he's not looking too good right now with his endorsements of what he did. And so from there, you have a year to where the money does end up somewhere. So of the four major asset classes that exist, stocks, they're down. Bonds, they're down. Commodities, well, oil's up. Some commodities are higher. So some of the money went there. Is real estate that much higher than it was a year ago? I would think not. I mean, real estate's very regionalized. You can't say real estate nationally is this, that, or the other. It's just very based on your location. But I really have a hard time believing that real estate's higher. I believe that if I were to be a national real estate guesser, I would say it's lower right now than the year before. So with that, in terms of why this year is so unique, the money never went anywhere. Everything went down. So where is it at this stage? I think it's going to appear somewhere. Now, this year was probably the worst year for a traditional 60-40 portfolio that a lot of people like to use, or 70-30 or whatever when you have a mix of stocks and bonds. Next year, one of those asset classes, I believe, is going to have a really big bullish year. Which one? Well, that I don't know. But, of course, I am still long-term bullish in the U.S. stock market like I've always been. I'm short-term cautious like I've always been. But I think that because of the fact that we've had such a shellacking in both of those major asset classes, that money's going to appear there next year, and in what area and how much, of course, who knows. But there's a lot of reason to believe the bulls are going to be back in bonds and or stocks in the coming year. So that's kind of what I'm seeing for the year. Oh, yeah, and I still don't like Bitcoin even at the end of the year.
Spoken in true Uncle Mike fashion, looking for some bullish outlook for next year, listeners. Let's keep going here with our rundown for how some of these products performed on the year. UVXY, that's where we were right before Uncle Mike popped in, Santa Mike here for the show today. It was at 6 3/4 when we kicked off the show, down about 0.85 from last week's show. That also at a 52-week low, listeners. It started the year at 1181, and then it topped out, take a guess when and at what level, listeners. I'll give you a couple of seconds. It was on March 7th. It hit 2347. So from the beginning of the year, 1181 down to 675. That isn't that big of a move for UVXY. We've seen it lose a lot more over the course of the year, obviously. Now from the top, the apex of 23.5 down to 6 3/4. That's a much more impressive sell-off. That's much more in line with what we typically would expect from an erosion perspective out there in UVXY. We've seen it go from 40 down to single digits over the span of not much longer than a year. So intriguing stuff out there in UVXY. SVIX, of course, a product that was born this year at a 1485 when we kicked off the show. A lot of hand-wringing back in March when this thing was launched. Oh, my God. Won't someone think of the children? This product will ruin markets as we know it. So far, it's not done a heck of a lot of anything. It's up 1.1 points from where it was this time last Thursday, and it almost is literally unched from where it launched on the year, listeners. It launched on March 30th at 1480. Like I said, we were at a 1485 when we kicked off the show. So if you bought it or did anything with it back when it launched and still have it now, it is literally unched from where you initially traded it there. The 52-week low came on June 10th. That's when we were having a little bit of action out there in the broad markets. A 914 was that 52-week low out there, listeners. So intriguing stuff as we hit that first leg of that sell-off, that first nadir in the markets. We saw SVIX taking a bit of a break and then pretty much rallying back to unched here on the, let's see, in fact, what was the 52-week high out there for good old SVIX, or in this case, really about 7-month high for SVIX. Looks like it came 1533. So that was not long after it launched, listeners. It hit that on April 4th. It never really got back at the highest it got since then. It got to almost got to 15 back on December 14th, 1491. But the high for the year, 1533, almost immediately out of the gates. It was a newborn babe hitting its high for the year. UVIX, another new addition to the vol arsenal this year, was at about 570 when we kicked off the show. That's down about exactly a point from where it was this time last week. Also at its 52-week low. That is literally the low for the year, 570, right where it was when we kicked off the show. So UVIX, a lot of our vol friends falling out of bed here towards the end of the year. Not entirely surprising. It is that time of year, listeners, when vol tends to vanish. So it launched also on March 30th. It launched at 1535 at the time. It hit its 52-week high, not when SVIX did, but actually on May 9th, 2721 out there. UVIX topped out on March 7th, and then we have, UVXY topped out on March 7th. UVIX topping out almost 2 months later, May 9th, 2721. So intriguing dichotomy between those two. Otherwise, somewhat similar products out there. Intriguing stuff. And then not to be outdone, VolQ, the at-the-money vol of the NASDAQ. Going to be hearing more about VolQ on the network again in the new year, listeners. At about 27 when we kicked off the show. Down 1.6 points from where it was this time last week. Its 52-week high came on May 12th, 4203. That was the high for VolQ. And the low came, ironically like VIX, at the beginning of the year, 1564 on January 3rd. So that's your looking back at the year from a major vol and index perspective. Speaking of those vol and indexes, let's see what's going on out there from an overall volume perspective as we're wrapping up the year here. VIX at 261,000 contracts. So that's looking decent. It's a little more than halfway. Pretty much the ADV is pretty much exactly halfway because the ADV is 518 now. So that ADV has been kind of wonky lately. You've heard me rail about that in the past, listeners. SPY, 5.18 million. The ADV, about 8.25 million out there right now. The S closing in on 1.43 million. I would normally say that's a lot of paper, but we've seen explosions out there of late. Still decent. The ADV, 2.6 million out there. And small caps, at least the IWM flavor, 471,000. The ADV, 780,000 out there. And the Qs, 2.02 million. The ADV, about 2.7 million out there. Let's see if folks have remembered the single names in this end of year kind of rally, but mostly macro-focused event. Let's see if folks have forgotten the single names once again. The answer is pretty much yes. Only cost you 147,000 contracts to break into the top 10 today. That gets us to our old friend, the king of the memes right now, AMC. AMC up about a quarter, trading right around 408 right now. Number 9, another top 10 frequent offender these days, Microsoft, hanging out at 158,000. Again, that's pretty light paper to break into the top 10, but it is the last couple of days of the trading year, so you kind of expect that, listeners. Microsoft hanging out at about a 240.5, up about $6 even on the day, 2.5%. So nice little pop for Softy out there. Number 8, Chip Zone coming early again, listeners. We've got AMD at 168,000 contracts. 64.75 is where it's trading right now, up about 220 or about 3.5% right now. It's about exactly $10 north of its 52-week low out there. Number 7, a name we haven't talked about in a little bit. This used to be a hotly contentious, hotly debated name last year. Got caught up in all the meme frenzy. This year, not quite as much. This is Ford. Trading about $11.42 right now, up about 50 cents or about 4.3% on the day. Good for 177,000 contracts. The 52-week low for Ford is 1061. they were kissing that not too long ago. Listen, they flirted with that level a couple of times over the course of the year. They got down there in June. They're flirting it again in September. And, of course, they got 1095 just a few sessions ago. They're 1105 this morning. So they've been hanging out in that range for a little while. They've flirted with it a few times. Today, good for 177,000 contracts out there. Then we go to number 6. It's the name formerly known as the Widowmaker. I don't know if it really merits that moniker. Still, of course, it did have some rough times this year. This is Netflix. 290 is pretty much where it's trading right now, up about 13.25, about 4.75% today. You know the saga. Just look at this chart. 52-week high, 620. 52-week low, 162. So I guess if you own it from 620, it certainly can be a Widowmaker out there still, listeners. Of course, we had that very infamous just implosion that came earlier this year. It came in a couple of legs. It started really in December, where they sold off from December at their high. By January 26th, they had already fallen from 610 down to 359. Then, of course, the infamous sell-off in April, where they fell from about 350 overnight down to about 226. And that was just, and then they kept coming for it down to about, bottomed out right around 162.75. And then they slowly have made their way back up to where they are now, 289. But yeah, two aggressive falls here in Netflix this year. So I guess if you look at it just from that perspective, it can still be a maker of widows and orphans out there. The last 6 months, though, a little bit of a different story, up 62%. So you have a smiley face if you scooped it on the lows out there. Good for 259,000 contracts out there today. It's a name, another one that kind of depends your frame of reference, how you feel on it on the year. This is Meta, 279,000 contract listeners, trading 120 even right now, up about $4.50 on the day. You know the low, it came not too long ago, 88.09. And then, of course, almost as soon as they touched that, they started doing the job cuts. They have settled some lawsuits against them, and the street has loved all of that. Even if all of you in our polls don't really seem to favor Meta right now, hanging out right around 120, good for 279,000 contracts out there. Let's go to number 4. It's NVIDIA, 350 even in terms of volume, 145.75 on the day, up about 5 1/3. That's 3.8%. The low for the year, 108.13. Except that came back in October. So they're almost 40 handles north of that 52-week low out there. Number 3, you can probably guess what it is by now. It's kind of been locked there for a while. This is the Amazonians, 441,000. They're hanging out right near, pretty much at pandemic lows. Going into the pandemic on March 13th, the low for them was pretty much 89.25. So they are below that now. They got up all the way up to like about 185. That was on July 9th of last year, almost 186. And then they kissed it again in October or November of that year. And ever since then, they really haven't looked back. So they've given up all their upside since the pandemic. Hanging out at number 3 again, a pretty light day, only 441,000 contracts, even though they are up about $2 or about 2.5% today. Bouncing off that 52-week low of 81.69 out there today. Number 2, you know what it is. They were coming for it recently, I should say, out there. And they was flirting with that all-time, I keep saying all-time. They were flirting with that 52-week low, listeners, of right around 129.04. And you know what? They broke it this week. They got down to a new 52-week low of 125.87. Who am I talking about? You know, listeners, it's Apple. For a long time, it seemed like that 130 level, that 129 level, they would bounce off that hard, and it did it a couple of times in the latter half of this year. This past week, not so much. They got down to 125.87 for Apple. Today, right back to pretty much that 52-week low, at least what it used to be, 129.70 now, up nearly $4 today, 366, or about almost 3% on the day. So a nice little pop for Apple, but they have come for this name. 52-week high, 182.94, 52-week low, 125.87 out there. So intriguing stuff. Good for number 2, 1.04 million. You know the number 1 is, listeners, it's the old Tesla, 2.62 million, up $6.50 or about 5.8%. So a rare green day for Tesla. They hit their 52-week low recently of 108.25. You don't need me to tell you they've been coming for Tesla with reckless abandon of late. Even on days when the market was rallying, they were crushing it. It looks like the low came just a couple of sessions ago on December 27th. So they have rebounded about 11 handles from that low. Exactly. They were at 108.24. Now they're at 119.24. But still, just an impressive drubbing here for Tesla. Ever since he spoke the name Twitter, that stock has pretty much done nothing but sell off. 2.62 million contracts on the tape right now, listeners. In terms of earnings, last week of the year, not exactly an earnings bonanza, listeners. There's only 3 firms that seem like they even have the temerity to announce this week. We got Green Tree Hospitality Corp. So there we go. Hot names, hot action on the earnings front. If you do want to look back, though, and see what exactly was lighting up our tape this year on the earnings front, look no farther than theoptionsinsider.com. Click on the Option News and Articles tab. You got the earnings move result, earnings season, and earnings trades reports for the entire year at your beck and call. We don't delete anything. You can go check it whenever you want, listeners. So all that data, all for free, because we like you folks, as we keep on rolling right on into the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, where Uncle Mike and I get weird, we get wild, we get wonderful. And Uncle Mike, we got some trades lighting it up today, but unless you want us to talk, listeners, about even more put love in good old Ares Capital, a.k.a. ARCC, they're coming in and buying more, 10,000 more, this time of the March 17 puts. They paid 48 cents. Unless you want us to dive into that at length, we have done that a few times now already. Maybe instead, we'll dive into some of the fun trades that caught our eye out there. What do you say, Uncle Mike? Think we should do a little bit of a look back on the year in the Odd Block, sir? You ready for that?
Is there any other way to do it on the last day of the year like this?
There is no other way to do that. Let's start it off, listeners. One of the worst losers we saw actually came pretty early in the year. And this was a trade we saw. We traded on November 21st of last year, and then they rolled, it was a DocuSign. They rolled 5,000 of the Nove 200 calls. They paid $49.50. So you know already things were crazy. DocuSign at the time was $240.69. They rolled those calls, and stock was $240.16. There was, looks like they initially did this in June of last year. They bought these in June. There were earnings on September 2nd, and they bought these Nove 200 calls 5,000 times for $49.50 when the stock was $240.69. And then they came in and bought more. They doubled the OI to 10,000. A few days later, on June 16th, that's when the options were $60. They paid $60 for these on June 16th. They came back, closed them out on November 10th. And rolled them to the Jan 250s. So at the time they closed out 10,000 of the Nove 200s, they actually got them off. Initially, the trade looked good. The stock was $266. It had popped 26 handles. They dumped 10,000 of them for $65.25. So even on the $60 kind, they made money. Seemed like a good trade. Take your money, live to fight another day. Be happy. On the $50 kind, they made a decent chunk. That's not bad. 10,000 times. You could certainly do all right with that. Instead, they put that money back to work on the Jan 250s. They paid $29 effectively, $28.99, 10,000 times. That is a 43 vol. So they made almost $8 million on the initial 5,000 lot. Just on the 5,000 we talked about. You could not quite double that, but pretty close for the entire 10,000. Then they turned around and spent $29 on the next leg. And it didn't work out for them, listeners. They didn't even make it to January. We reviewed it in January, which is why it counts on this show. We talked about it on January 13th of this year. But they ended up closing these out on December 8th for, oh my God, 25 cents. So they made a bunch of money. They spent it again. They spent $29 on 10,000 more of these calls. And they lost all of it. And they didn't even get to to January, to expiration. They closed them on December 8th for a quarter. So they wanted to get whatever they had left. They lost $28.75. So they're out pretty much almost $21 million, about $20.85 million on this total trade. So that was right out of the gate, Mr. Uncle Mike. and it still reigns as one of the worst losers we've seen out there, sir. What say you on that? Very disastrous. They made money, and then they gave it all back, and then some, Uncle Mike.
There's the old adage, never take a winning trade and make it a losing trade. I know we're all guilty of it at some point in time. I know I am, and I'm sure you are at some stage too. You've made at least one losing trade in your career. But this is a lot of money to be making losing trades with. So I think we've said it on the Odd Block many times throughout the 10 years or so that we've been doing this show. Sometimes the big money isn't always the smart money. And at least in the second part of this story, that's true.
That was true indeed. So that was a painful one, listener. Let's see if we can maybe flip the script and have a winner out there. We also in January. January was a hot time for the Odd Block, listener. It got out of the gate hot this year. January 14th, so around that same time, we saw a pretty sizable call vertical in Alcoa, of all names. We all know this used to be kind of a hot name, used to be the kickoff name for earnings season. These days, not so much. People don't really hang on aluminum as much as they used to. But nonetheless, this was an interesting year for a lot of raw materials and components. They all kind of got bid up earlier in the year. We saw someone coming in on January 14th for a size call vertical in Alcoa. They picked up the Feb 6575 call vertical 12,158 times. Looks like they paid $2.15 for it. They paid $3.15 for the 65, sold the 75s for $1. The stock at the time was $60.87. So they needed this thing to really light the world on fire. This is aluminum at the end of the day. So not exactly a name you would come to and say, okay, I expect this thing to make a whopping 15 handles or anything close in the span of a month. Because they weren't giving themselves much time. They had pretty much exactly a month on this trade. And y'all know, listen, when you buy premium, you need that stuff to happen early. And the stock at the time, $60.87. And they kept it open. They kept hope alive, love alive. This was still open on February expiration, listeners, when the stock went out at $78.20. So they paid $2.15 for this, listeners. So effectively, they made, what's your max profit on a $10 vertical? They made $7.85. 12,158 times, listeners. That's not a bad little return in aluminum for the span of, a month's work out there. That's about $9.5 million if you don't want to do the quick math out there, listeners. So, wow, this one, we saw two massive losers and winners almost within days of each other, because the other one was, what was it? That was January 13th when we reviewed it on the show. And then we saw on the 14th, this trade go up. So, wow. Crazy time. Uncle Mike, we did a lot of living in January, one of the worst losers we've seen recently, and one of the better winners, sir. What say you?
No doubt about that. You look at it. Aluminum. I remember the times fondly. We had the talk about how aluminium is such a more fun way of saying aluminum, and how we love our friends over in Britain for such a thing. But I digress. But yeah, whenever you can make that much money on an aluminum trade as such, it's not a bad way to go, especially that quickly. So it goes to show you that if you time things well, things can be pretty prosperous for you, and that's one example of it.
I think it makes it doubly interesting. They made all that money in aluminum. Of all things, it's like sleepy.
It really does. I mean, who goes out there and says, I'm going to make it big in the markets? Oh, what are you going to invest in? The FANG names? Are you going to lever yourself in the commodities? Are you going to buy a bunch of options? What are you going to do? No, I'm going to buy aluminum.
You expect this in like a meme stock or something like that, or Tesla, who knows? But aluminum? And the fact that it worked for size? That makes it a doubly odd trade, listeners, and a fun one, and certainly worthy of consideration for us. And one of our just holy crap trades of the year came on August 12th, listeners. Someone was just lighting the world on fire out here in Pinterest. They put on 102,000 of the AUG 20 puts for 13 cents. Seems like they were buying these bad boys. And then we thought, that's weird. Stock was $23.55 at the time. 102,000 of anything is going to catch our attention, let alone Pinterest puts for 13 cents. So we sent our Eye of Sauron back to work, and it looked like this was actually the second leg, the closing leg of a trade that they put on back on July 6th. They started with 80,000 of these AUG20 puts for $255, hitting kind of the bid on these bad boys. They did obviously about 20,000 more. And looks like it worked out, Mr. Uncle Mike. They sold them for around $2.50, bought them back for 13 cents. That's how it's done. You don't usually see it done 102,000 times. That's enormous. That might be the biggest line in the sand we've ever seen in a single name, at least, in terms of just raw numbers of shares involved. That's enormous. Again, looks like it worked out. They bought them back for 13 cents. 19.3 million on the 80,000 lot that we found. You add in all 102,000, it's about 24 million bucks. So Uncle Mike, this has to get the award for the most sizable line in the sand, and it has certainly worked out this year, this time in Pinterest, sir.
Yeah, I mean, lines in the sand are very valuable, good things. I've created many lines in my sand throughout the years, and it's one to where we talk about on the show a lot, on the Odd Block as well. But if you have a line in the sand, you really need to follow it, and it does make me happy to see when people don't dare step across this line. Referring back to, I believe it was this year where we brought up the Bugs Bunny Yosemite Sam analogy, where Bugs Bunny says, "I dare you to step across this line," and Yosemite Sam says, "Well, I'm a stepping." Then if you do that in trading and you keep stepping across the line and creating a new line, eventually you go off a cliff like Yosemite Sam did. But in this case, there's no cliff involved, which is always a good thing.
Yeah, our notes for this trade pretty much just say it all. We said, Pinterest, holy crap. that pretty much sums it up, listeners, as we keep on rolling and go around the block one final time for 2022.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, listeners, if you're wondering when we're going to get our guesses and stuff for our VIX for next year and stuff and pay off last year's, we're going to do a lot of that on Vol Views tomorrow with all the VIX guesses that everyone gave us. We'll get Uncle Mike a chance to maybe think about it over the weekend. He could probably give his guess on Monday when it's official. And we have the actual question of the week up there. If he wants to give us an exact print, he is welcome to do so as well. Of course, you folks are always welcome to play along as well. And if you get it right, a year from now, maybe fabulous prizes are in store. And maybe you are winning fabulous prizes from this time last year if you played along. So stay tuned for that. Speaking of playing along, we had some fun stuff. We were just having fun this week with our question of the week. We asked you, quick, fun holiday flash poll, one day only. What is your favorite holiday? We gave you the opportunity for write-ins. A lot of you wrote in weird stuff. Age wrote in Memorial Day because it's the unofficial start of summer. Pariah Pants, I like that handle, said, my son's birthday is the 4th of July, so definitely not that one. Okay, maybe some issues there, father and son. This guy, J4340, wrote in the Pagan Festival of Yule. Yes, all right. Yes, for all of those. Our actual choices, listeners, were Halloween, Christmas, Thanksgiving, or 4th of July. And Christmas took it. 41.2%. Thanksgiving actually hanging in there, 25.8%. I guess a lot of you folks like to eat turkey. My personal favorite of those is Halloween. That tied for last, 16.5% with 4th of July. Uncle Mike, what is your favorite holiday of the year, sir? Or maybe you have a write-in of your own. Are you big with the Pagan Festival of Yule?
I can't say that I'm big with that one, but of the four choices, I'll go with Christmas. I mean, how can you not like Christmas? It's the most wonderful time of the year. Celebrate the birth of our Savior, Jesus Christ, and what more can you want from that? But the write-in that I would do, I'll say National CB Day, October 4th. Everyone always wants to know when the truckers always say that's a big 10-4, good buddy. 10-4, National CB Day, October 4th, which also happens to be my birthday. So those are my two picks.
I was like, how do you know what's National CB Day? Now it makes sense. It is your birthday. So that was a subtle way to say his birthday is the best holiday of the year, listeners. If you read between the lines there. Last week's question of the week, our actual question, our final real one, such as it was of the year. And we'll pay off. We have a lot of great questions throughout the year. We'll find a way to pay off all that stuff and kind of maybe do a bit of a look back on our questions of the year, because it's been a fun way to really take your pulse on a lot of interesting issues throughout the year. So we'll come back to a lot of that. maybe we'll have a big special for that early in the new year to celebrate. Maybe sometime in conjunction with our big 16th anniversary, which is coming up, which is terrifying. We asked you last week. It's a holiday season. Many stocks are looking cheaper heading into the new year. If you can get a gift, remember this was free. A gift of 10% out of the money call expiring at the end of the year. And one of these four names, which would it be? End of next year, I should say. Amazon, Facebook, Tesla, or Apple. And 31.3% of you chose Apple, followed by 29.3% of you for for Amazon. 26.3% for you for Tesla, and only 13.1% for the good old FB. Mr. Uncle Mike, sir, what are you keeping an eye on for the rest of this week and indeed as we head into the new year, sir?
For the rest of this week, just closing out any positions or just making sure I got everything taken care of tomorrow before the year ends. But in terms of the new year, I'm going to say that from point A to point B, with point A starting at the beginning of trading next year and point B being the end of trading next year, I am possibly at my all-time high for bullishness going into next year.
Wow. All time. That's saying a lot because you're usually pretty bullish. You're usually at like a 6 any given day of the week. So you're saying you're at like a 9.9 now?
I'm pretty close. And I mean, I'm not going to, I'll still follow my aggressive trading. I'll still follow my aggressive trading strategies. But what I'm looking at for next year is that if we do have a bull market, which of course I'm going to think we're going to, what's going to lead it are the names like the Amazons, the Apples, and the Googles and things like that. And just, I think that, so Amazon's arguably one of the best companies of all time. Most people would agree with that, or be one of the top 10. Most people would say, who knows? They're a really good company. And so Amazon, we're right at our COVID lows, for crying out loud. And so if the Amazons and the Apples and all of them lead the market like they typically do when we have a bull market, they're really low right now, and they're really, really cheap. And so considering, the only thing that I could see putting the kibosh on this market next year would be if the Fed raises rates more than they say they're going to do. If they top out at the 5.2 or 5.3 or whatever it is they said, then I'm very bullish. And those are the reasons why.
All right, listeners, that music means we are done for the year for the option block. I want to thank all of you out there who have made this year just such a record year on just about every front, and it's all due to you folks, really. We love you all out there, whether you're just listening to OB, listening to the full network, whether you're part of the secret club, whatever you're doing out there. We love you all out there. Going to be some fun, interesting new wrinkles to the old OB coming in the new year, so stay tuned for that, listeners. But before we go, Mr. Uncle Mike, if folks want to spend some quality time in and around the new year, maybe they're drinking the last of the eggnog from Christmas, they're ringing in the new year, maybe they want to ring in the new year with some Uncle Mike content, where should they go? What should they do?
Check out check out Twitter. Follow me on Twitter at Mike TOSAW, TOSAW. I'm putting out an article probably within the hour or so.
I was going to say, check out Tesla. Wow. A rare Tesla plug from Uncle Mike.
For some reason, it's a Freudian slip, I guess.
It makes total sense. They are kind of synonymous these days. The two T names involved with Musk, and also a lot of drama out there. If you want a drama-free zone, though, Uncle Mike is a good place to go. St. Charles Wealth, of course, online. At Mike TOSAW, TOSAW, is the place to go on the old Twitters. Find them on the old tubes as well. We got to get on out of here, listeners. Don't worry. Back again in a little bit for all you secret clubbers with TWIFO. Looking back on the year out there as well from a vol perspective, cross-asset correlation. What were the biggest movers and shakers of 2022? Well, you got to tune in to find out. It's coming up next. And then we'll see you back here tomorrow, vol views. And then after that, for all you pro folks, for Options Oddities. Then back again in the new year. Another episode of the Option Block. Have a great holiday. Stay safe out there. We'll see you in the new year, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.